Hello and a warm welcome to this episode of Conversations That Matter, brought to you by TransUnion. Now, this is essentially where we gather leaders, individuals who have industry experience and expertise that they'll share with us today to participate in a conversation focused on financial inclusion. Now, when I ask you what that means, what comes to mind? If you consider the fact that well over 500 million Africans across the continent are excluded from financial participation, and in South Africa alone, that number sits at 16 million. Perhaps it gives you a different perspective as to just how wide this challenge is and how we need to do more to make sure that those who save in their stokvels, lend to their friends and neighbors, and of course are still trying to ensure that they're able to build their businesses in a sustainable manner without having access to credit, are brought into the ecosystem to ensure that financial inclusion is also an aspect that they relate to. Well, today I'm excited. As you can tell, we're around a boardroom table, and that means we're speaking serious business with a few of my favorite friends and colleagues in the industry to help us unpack all themes regarding financial inclusion. These are industry experts who represent banks, entrepreneurs, key technology partners who help us assess credit capabilities within the country, and more so, policy makers. This also helps us get a better understanding of the context and the lay of the landscape when it comes to banking and non-banking institutions and just how they enable the flow of money in our ecosystem. So without further ado, let me introduce you to our guests who are joining us today. Excited for this conversation. To my left-hand side is Ghana Msibi, the FNB CEO of Business, taking care of conversations to help us understand how the bank itself is working as a propeller to enhance inclusion. Also joined by Lee Naik, President and CEO of TransUnion Africa, helping us fully comprehend how best it is that the entity enables data, technology to enhance the level of information and insight we have into credit behavior. Not forgetting Lesego Mashego, who is the head for South Africa when it comes to financial inclusion program, specifically at Finmark Trust, helping us ensure that policy does shift the landscape and that ultimately we create an enabling environment to heighten the level of financial inclusion. Also joined by an entrepreneur who quite literally gets things done, Bulelani Balabala, who joins us as the founder of T, that's Township Entrepreneurs Alliance. And of course, to make sure that we also get some perspective regarding the flow and movement of money, how it does so, the new innovations that are coming about, and most importantly, how we measure these particular metrics, joined as well by the head of stakeholder engagement at Pay Inc., Sherigan Naidu. I'm excited for this one because we're going to pull at many levers to really get a better understanding of the context of financial inclusion. And perhaps for many of us, when we try to grasp this particular concept, we often think, well, hold on. South Africa is a well-banked environment. If we actually take a look at some of the innovations regarding the likes of mobile money and new themes to actually facilitate payment and inclusion into the economy, we found ourselves adopting them, but still sticking to the metrics that have been provided by banks in South Africa. Ghana, you represent one of the leading banks in the country and the continent at large. I'm quite keen just to get your perspective as a leader of FNB Business regarding financial inclusion and just exactly how banks continue to play a critical role there.
So I think it's fair to say that banks have and I think continue to play a pivotal role in making sure that we've got fair and equitable participation in, call it, growing the economy. Now, I suppose if one thinks about the banking infrastructure, I think largely we've been very much a formalized or catered more for the formalized parts of the economy. And I think the transformation that is required is to really bring everybody along. And when I say everybody, and I'm kind of loath to use the word informal because I think, even in the communities, those markets themselves are formalized in a particular way, even though not formalized in the context of the descriptions that we would use. But I suppose it's bringing everybody in the community economy, the township economies, and making sure that there's flow of funds, there's access to credit, there is fair and equitable pricing on the credit that the individuals then ultimately receive. There's fair and equitable collections practices. And so if you think about the broad ecosystem, it's about making sure that we don't have the minority participating at a discount and the majority at a premium. I think it's about trying to make sure that we find parity. I suppose another point is to still equally make sure that in so doing and understanding the context of South Africa and understanding our past, it's about how do we introduce alternative data sources to ultimately be able to inform decisions.
100%. You mentioned two key themes there that I'd like to explore, and perhaps let's talk about parity first. Lesego, I'm looking at you because you're fundamentally the person who sits with key players within policy making to actually shift the needle and create a conducive landscape. When you take a look at the evolution of financial inclusion in South Africa, how far have we come, but also how much more needs to be done?
I think we've come a long way as a country. I think banks did well. I think the introduction of BEE codes, ensuring that previously disadvantaged people are able to access financial services has done well. Bank account ownership in South Africa is over 80%. I think it's also driven by the fact that grant recipients now have to get their money into a bank account, so you can't necessarily go to a cash pay point, although you are able to, but the money is transferred into a bank account. Mm-hmm. And I think from an account ownership perspective, we've done well. From a credit perspective, consumption credit perspective, we've done well. But I think we're struggling as a country in ensuring that there is deepened usage of financial services among the low-income earners. And I say this because you find that a lot of people that live in townships, in rural areas, they have these cards, right? But they use them as a mailbox. So the survey that we run, FinScope surveys that we conduct on an annual basis, what we find is that 50% of people will withdraw all their money immediately as it hits the bank account. And that speaks a lot to the fact that there's no infrastructure, or they don't have the ability to use these cards where they reside, which means they need to go to a town, access the money, or a retail store that's in their area, access the money, and then make use of cash throughout the month. And for me, I think it then does speak to how then do we track the informal traders that are in these communities? How do you know how much they've made? How are you then going to continue to provide them with services and products that they require when you don't know them and you can't see them because they operate in a cash environment?
I'm excited that there has been progress, and you're echoing sentiments that have been shared by Ghana. He touched not only on parity, but also on data. You also highlighted that, and Lee, this is certainly where you come in, and perhaps also focusing and highlighting the importance of financial inclusion, especially just as a key enabler to unlock so much more potential when it comes to driving entrepreneurship in South Africa. What are you seeing in this particular space, and what other levers can we pull at to truly unlock potential here?
It's a great question, and I think, what is inclusion? Right? Is inclusion being highly banked, over 80%? Is inclusion getting access to leverage to do more so? What is inclusion? So when you talked about in your introductory remarks about the 500 million people, these people are excluded from the financial system. Mm-hmm. But to be included doesn't mean to just have a store of your money. It's to make that money work for you, to increase your personal wealth, if you're a corner shop person, if you're a person that's selling fruit in the corner, to have access to money. Now, what we know as South Africans is that we're a highly indebted society. For many people, we spend the majority of our money, almost 2/3, servicing debt every month. Mm-hmm. And for those that do have debt, Guguletu, we struggle to pay it on time. Now, the word consumption-driven has come up a couple times. Now, clearly people want to access money. People want to be part of having better lives and having access to opportunity. But can we see them for who they are, for their hopes and their dreams? And that's the provocation of what inclusion is. It's about moving us from the continuum of having no access to a store of money, which could be a wallet, could be a bank account, all the way to accessing your first loan, to doing something with that money. Today, you've rightly pointed out, there are 16 million adults that aren't able to access this financial opportunity. Sure. Not because they don't want to, because we can't see them for who they are and who they dream of. And for us to have this egalitarian type society, we need to change where we think as banks, as lenders, as researchers, as policymakers, to drive that inclusion. And in the conversation, we're definitely going to talk about whether that's difficult or easy. It is very difficult. 31 years into our democracy, we have not been able to overcome the challenge that the way we run our informal part of our economy, or the non-traditional part, as Ghana has called out, it is difficult. A largest part, Google, to wrap up, is that we have no trust in systems. Just historically, there's no trust. And if there's no trust, what do we do as players in the industry to make a stokvel want to trust us, to make a person that goes to a mashonisa or to a microfinancier say, these people can see me for more than who you think I am. I have hopes and I have dreams. So we need to go into the business of creating hope as an industry where we'll only have a better life for South Africans if we're all included.
100%, and that actually speaks to ongoing engagement and education, right? Which we have seen an evolution and participation of there. I'm intrigued by that 16 million figure that you mentioned, because if we do take a look at the third quarter unemployment numbers in South Africa, I guess what the figure does reveal is that at least 17 million South Africans are employed. So if you contrast that with 16 million who are excluded from the economy, that raises a lot of concern and really goes back to the fundamentals of the economic structures that we have in the country to actually heighten employment. But movement of money and payment is also a key theme that's come about. And Sherigan, this is where you also have your area of expertise and contributing to the conversation, especially when it comes to the movement of cash. Now, South Africa is a very cash flush society. Totally. And certainly on the back of the comments that have been shared by our colleagues, largely because we do operate in traditional and non-traditional sectors that might not have the facilities, the infrastructure to allow digital movement of money and cash. But I'm quite keen to hear your observations on the drive that we continue to see from an institution like yours as Pay Inc. to actually ensure that by moving to digital payments, driving financial inclusion, we can actually enhance the level of data, accountability, hope and trust that we're trying to build within South Africa's communities.
We are a payment clearinghouse system operator. We sit in the middle of the banks, and we enable transactions to flow through the national payment system.
So essentially, you know where our money goes,
well,
what we do with it, and how it moves from Ghana to Lesotho.
We've got a fair idea. We've got a fair idea, and we can have a chat after this conversation. But to your point, a sizable proportion of the payments in South Africa are made in cash. And that's something that we often forget when we're talking about the data that comes through Pay Inc's systems. I mean, we've often spoken about our economic indices, the Pay Inc Economic Index, which tracks how the economy is moving. It's an outcast indicator. But something that we've added to that was to try to take stock of what's happening from a cash perspective. So we've added an element that also takes cognizance, in addition to the electronic payments, to try to keep an eye on what's happening in cash. But the fact that cash by its very nature is anonymous means that you're not going to be able to really see what's happening on the peripheries when the cash is actually being used. People trust cash. Cash is the payment instrument of last resort. When we were introducing PayShop, part of the research that we'd undertaken had indicated that cash, 8 out of 10 payments in South Africa are made in cash.
Got you. And I think that's an important point that you mentioned for many of our guests who are joining us to actually understand that the opportunity is opening up to many
Absolutely.
more players to actually ensure that we do allow for parity to take place when it does come to access to cash, to credit, and of course being recognized for, regarding the trust in the data and information that one can provide. I do want to ask you a provocative question though. Does financial inclusion mean being a completely cashless society?
Absolutely not. Because financial inclusion means you giving people the choice as to what payment instrument they want to be able to use. And I'm talking about it through a payments lens because I'm a payments practitioner. But financial inclusion, we know, goes beyond just payments. It's the ability to be able to access loans. It's the ability to be able to access insurance. It's the ability to save, the ability to invest.
Well, let's speak to someone who knows all about payments, receiving them on time, sometimes delayed, sometimes not at all. That's typically the journey of an entrepreneur, right, Bulelani? And you have certainly seen it all. You clearly have seen the evolution of building that level of trust, of resilience, of hope, of access to data, and both pros and cons when it comes to the flexibility and opportunity of financial inclusion within the entrepreneurship space. Talk to us about specifically for those who happen to be in the informal or non-traditional economy and sectors, who work at taxi ranks, who have an internet cafe, as you once did when you started your career. The evolution that we're witnessing here, has enough been done to ensure that more entrepreneurs can participate in the economy and be seen for the data, the information, and of course the capacity that they carry?
I think in my view, not enough has been done. And I'll tell you why. I think when you sort of look at, so we have in the past 10 years directly worked with over 100,000, it's about 124,000 township entrepreneurs nationwide. So all 9 provinces, about 139 townships. It's quite interesting that when you sort of get the input data, because I think when we get the data in, there's postured data around when you ask them questions around how much do you make, then you know it's postured because the individual wants to give a better position. So the likelihood of truth is very slim. But then you then ask questions around, are you banked or non-banked? What I used to say to my team is that the second biggest bank in the country is other. And other is usually mattress or cash or whatsoever the case is.
Money under the mattress.
Yeah, money under the mattress, right? These individuals then now rely on keeping their money for transactional purposes. And I mean, I'll make you an example. Sometimes not necessarily the case that they don't have access to bank accounts. They do have access to bank accounts. Most cases they trade out of their own personal bank accounts. And I think that came up through, I think, one of the statements made by Gerrie Fourie and in the media. But I think one of the key things that came out of that is that when you've got cash, then I've got leverage to be able to go to a supplier and get a better discount because it's money in the bank right now. And I think that then came up as a result of the closeout periods, you know, the period or process it takes for them to get their money once the card payments have gone through. But I think for me, the key thing, especially from an inclusive perspective, is that when we are creating a financial inclusive environment, we're not taking 2 things into cognizance. The fact that a micro enterprise or an informal enterprise is looking to do 2 things. How does it make me money? How does it save me money?
Yep.
Doesn't matter the level of financial literacy or financial education that you bring, but if it doesn't answer these 2 main key things, then we'll have checklist numbers of 1,000 people in a room and then call that as a KPI being met, but it's going to fly over the individuals because the excess will still not be there. And I think for me, I definitely agree to the fact that there is regulatory reform that's required. But I think for me, from a banking perspective, there's also then there's a big need and an appetite for more risk. Maybe that more risk sort of looks like shifting your perspective in how you view the market. Maybe it looks at if you have a micro enterprise who has defaulted on payments, is to dig a little bit deeper into understanding why have they defaulted on those payments, as opposed to the standoffish position that says that, well, you've missed 3 or 4, then as a bank, we won't give you any of those financial means. But what that ends up doing is that it then continues to then build up on that wide divide that you have in the market. So I think for me, it really, at its very essence and foundation and crux, it talks to intention. And I think for me, intention looks like some of the key things that led Dr. Richard Maponya to have the fastest and the biggest dealership in the country from a sales perspective, because they understood a couple of key things. We have individuals who want vans, who want vehicles, who sell chickens in the township, who sell cow heads, who sell intestines. But the biggest challenge is that they are not banked, they're not in the formal banking system. So we can't give them financing. So some of the key things that they used to do is that they would get their sales team to walk customers through a journey of 3 to 4 months. They would write down the ledgers, they'd drive them to the banks to go deposit the money in the bank so that they're able to then come up with a proof case. That for me then talks to intention. The people are willing, but purely because of how they've had to operate for over a number of years, it becomes difficult for them to then come into the mainstream because the mainstream says, we need you to be formal. But the mainstream has never paused and said, in actual fact, we are the ones who are informal to how this informal economy actually operates.
Got you. Well, let's shift gears on this conversation because we've got a banker right here.
I could hear. When started speaking, I'm like,
Right?
Here we go.
So naturally, the next question to you, Ghana, is how are banks actually responding to this, right?
So I think there's a few things, Gugu, before I kind of speak to how banks are potentially responding is, and I'm probably going to sound defensive here. Forgive me if I do, but banks do take the wrath more often than not. And I suppose there's a case to be made in terms of the extent to which banks are potentially informal to this economy, which is of course an inverse of how we would always talk about it, which I think is a different posture. But on the back of this, there are a number of things that have to be part of the conversation. One is regulatory harmonization.
Got you.
In terms of what banks have to comply with.
And that's an important one to underscore because it's the reason why we've seen shifts in KYC, National Credit Act as well, to ensure that there's a level of protection not only for the customer but for the bank as well.
100%. So there's regulatory harmonization to what the banks have to comply with to ultimately enable this inclusion, and I think as I've defined as economic participation. Point number 2 is banks don't lend their money. It's depositors' money, right? Now, this is very important to understand. We have to then employ a very different level of responsibility with depositors' money.
In other words, enough money in the bank account to make
You
sure that
have
should
to have enough
anything go
money.
wrong, you can actually pay your deposit.
100%. So effectively, you've got to keep money in the instance that things go wrong. But you understand that if you are keeping that money, that's lazy money. So effectively, you can't deploy that money to grow the business. So imagine a world where you would say to an entrepreneur, keep 10 rand for you to spend every 100. Okay, it creates inefficiency in the system because you've got to price for that. All right, so that's another thing that banks have got to comply with, because we would all appreciate if a bank were to go bust, the implication on SA Inc. would be significant. On top of that, we've got to hold provisions and so on and so forth. So you can start feeling sorry for me right now. I think the point I'm trying to bring is we are dealing with a lot.
And the truth is, though, as an entrepreneur who might be represented by Tia or T, they probably think, well, you're worried about South Africa. What about me?
Yes.
I need bread. I need to build my business. I've got lights and bills to pay and a family to take care of. So despite, the heightened level of regulation that we see within the country, are there ways within which perhaps you're partnering with peers like TransUnion and maybe other players within the ecosystem just to ensure that there are alternative ways of meeting entrepreneurs at their point of need without compromising on governance and controls?
No, look, 100%. So I think the question really talks about how we've got to then become a little bit more innovative. How do we invert ourselves, right?
Yes.
So I just wanted to give you the backdrop as to the fact that as banks, we are pushing with the regulators to say there are a number of things that we are complying with that are potentially making the topic of financial inclusion a little bit more restrictive. There's a lot of conversations we are having locally and we are having internationally. You talk about payments, we talk about a different store of value. Okay, so F&B e-wallet, would you consider that banking? Would you not? It moves cash. We talk about cash plus generators where we've got people we're partnering with. Now we're talking about the innovation, but we have to think differently about active participation.
Yes.
Okay, so it cannot be, and I concede, it cannot be enough that we've got the constraints, and so we've got to think differently. So how are we solving it?
Yeah.
We are partnering, in which I think we're going to have to partner with the fintechs. The reality of the matter is that banks would not be able to solve this issue by themselves. We were having a chat a bit earlier with Lee and them, and I'm saying, we've got to think deeply about these alternative sources of data and how we think differently about what points we look at. I think there is a lot to be said about markets. There's a lot to be said about how do they sell, how do they scale, how do they conduct the bank account? So what happens as a business person when you do withdraw everything? Because the reality is, those are some of the data points that we look at and so on and so forth. There's a lot we have to do.
Got you. I'm happy to open this up to the panel, but I also believe, Lee, this is perhaps where you can also come in. As Ghana's mentioned, this is an opportunity for fintechs to come on board and other key players. And I'm aware that TransUnion has been doing a lot of work with a lot of the telco providers to actually monitor the purchases or movements of data that a consumer would make and using that as a way of assessing not only their ability to access credit, but also just their overall financial behavior. Maybe let's start off with you just to take a look at, this inclusion and opening up of the ecosystem and finding the alternatives together with banks. How does it address the need that entrepreneurs like Bulelani and so many others that he represents actually have in the environment? It's also open to the panel.
I think it's an interesting question. I must actually empathize with Ghana as well. It is difficult doing what we do, right? We're a highly regulated environment. And actually, if I look back at the last week or two, it's been a great few weeks for South Africa, from having an S&P upgrade to having our interest rate decline. There's a lot going, having a successful G20. There's a lot that shows promise for a future Africa that we all believe in. This is our home. But when I think about the challenge of inclusion, Ghana's right. We've got to do something different while being compliant with law. Right, that's important. The juxtaposition is equally as important.
Got you.
The one thing we've been playing with for about 2 years now is the fact that we may be highly cash intensive as a country, which is not the same as other African countries, by the way, right? But in the market where we are cash intensive, where trust is a challenge for us, the one thing we realized, Gugulethu, is that we still all have cell phones, right? In the market, everybody's got a cell phone, mostly prepaid. Are there signals in the data? It sounds magical because it's actually quite difficult to convince ourselves that these, the weighted risk is at a certain level, or I can trust this person or that person. But we've been finding a way over the last 18 months to look for those signals in the data. It isn't ready for prime time. We're busy alpha testing it right now. We've done this with 5 large customers that work with TransUnion today. We've been able to find a way to score the unscorable populations from this non-traditional economy.
And just for context as to what that is, it's essentially saying I don't have a credit card or a store account, so you can't necessarily measure how often or how regularly I pay off my credit, but I'm using data and access to the network, so that's how you actually track my behavior as to how often I actually make these purchases.
Well, the point is that there's this group of 16 million people that we know nothing about. We call them the invisible part of the population. They've got hopes and dreams. We just can't see them because they aren't part of the systems that banks and Pay Inc. and all of us use. They don't show up in the systems of record. So the provocation is, are there signals elsewhere? And like Ghana said, we call this alternative data. Are there non-traditional ways of understanding consumers and small businesses that aren't mainstream? And what we figured out is that there are many ways to do this. It could be looking at their shopping data from their baskets. What do they buy every month? But the one thing we figured out, which is quite pervasive, is that we all have cell phones. And given our global business at TransUnion, we figured out, let's test to look for signals in the data. And the signals have told us that of these 16 million people that are excluded, we've already been able to find a way to score up to 2 million of them. Now, the more telcos participate in this conversation, we all participate in making it better for South Africa. It's equally important to call out Ghana's point again. We have to collaborate a part of the sharing economy for us to solve this challenge. Not one bank, not one telco, not TransUnion, not TEA are going to solve this. We have to come together. And so that's what we're trying to do, Gugulethu, is find signals in the data to tell us that, hey, you can take a chance on Lee. You can take a chance on Ghana. Based on these patterns, he's worth this amount. Now, typically, when they transition from having access to prepaid airtime to moving into the formal financial system, they typically end up in a small ticket loan, right? The likes of what these cash advances are, or it could be a retail account. But you need to almost work up to getting access to better credit. Now, the point is that we aren't going to rush this. There's no panacea overnight for the challenge. But if we all are open to being cognizant of law and regulation, by being innovative that we can be more and do more together, I reckon we can solve this.
Got you. Lesego, from your perspective, we're doing something right. We are collaborating. There's some innovative solutions. But what more needs to be done just to heighten trust specifically, especially within the group savings culture?
So, I always say that we tend to sit in these boardrooms and we try to come up with solutions for people we don't understand. And maybe the minute we go to a community and have engagements with the people in the community and understand what their needs are and understand their fears in terms of what are the things that they're uncomfortable with doing from a financial services perspective, what makes them uncomfortable, then you're able to take a step further. A lady said to us, I won't even use you can't give me a store of value that's provided by a mobile, an MNO, because they take my airtime, right? So if they take my airtime, and they probably don't, it's because she probably subscribed to something. She is not aware that she subscribed to that thing. It's taking money over and over again. She thinks they're stealing her airtime. Why will I trust that system? Similarly, I want to use a bank account. I put my money in a bank account, but I put in 100 Rand, and when I came back, it was 80 Rand. It's not that they stole her money, there's a fee, but nobody has explained those things to this person that needs to use these financial services. So I think a key thing is understanding, they use a stokvel particularly because when I give you 100 Rand, when I come back, it's still 100 Rand. It hasn't changed. It's not 80 Rand, But also when I come to you and I say I need a loan, because you trust me and we're part of one group, you're able to help me. And I always say that I think it's important that financial services financial service providers need to think about how do we partner with the people that people trust, right? I always say that you're never going to eradicate stokvels in South Africa.
That's a very important point that you mentioned, because when it comes to funeral policies, there's
You're
already a
never
heightened
going
level
to-
of trust there, right? In
Yes, and
communities, in churches, in stokvels. But what about when it comes to building and fostering trust for entrepreneurs?
And Gugu, I mean, those institutions, I always say, when we have a funeral at home, like stokvel is not only there to give my money the money. They're actually a community that's there to do something with me and help me. And I think when we innovate, we need to think about these people and think about community members and say, a South African actually believes in having a community around them. And they want to be supported by that community. How do I innovate and leverage those communities in order for me to be able to serve these people or businesses better? I need to be able to do that. But then it goes back to the regulation, et cetera, right? I think it's important that we think about providing an enabling environment. I don't think it's fair that we're constantly saying that banks are bad, that is bad. What have we done to ensure, from a government perspective, what has government done to ensure that Ghana is able to bank a lesego and provide them with a loan? Are there credit guarantee schemes that are in place that would enable Ghana to be de-risked so that Ghana is then able to bank this person? So I think it's a more of an ecosystem thing that we need to look at to use financial services. And I think that's when you're then able to innovate and say, how do I meet them, ensuring that I'm still in line with the regulations and the law that's in place?
I think it's a massive solve so that when you arrive, you are part of the society more than here comes a bank. And I think it's something that we're seeing. And I think when we talk about Cash Plus partners, where we've kind of started to partner with spother shop owners to operate as withdrawal points. Because remember, they get cash. So now, as opposed to taking the cash to go bank it, we say, if someone wants to withdraw, they must withdraw from the store. Okay, so we're seeing that starting to take off. And I think, we actually got that from some of our African subsidiaries, because this is quite massive in the F&B space. But I think it's things like those where you're almost creating a mini bank or a mini banking point in the township. And we see that trust factor comes in, and that helps with cash components, but it doesn't solve for real-time clearing and pay sharp. But I think that's his problem there. But I think
it makes a difference, right? Because I trust
cash.
Ghana that I see regularly in my community, and because I trust Ghana and he's providing me with services in my community, the next time they say go to F&B, I will trust that I should go to F&B because we've built an element of trust between you and I.
Sherigan, prepare for that question, hey? The cost of pay share. It's coming up. But before that, I'll give you time to warm up. Bulelani, your response and I guess feedback on the back of what we've heard.
I think one of the key themes was sort of coming on is the key theme of community. And I'm glad that, it was unpacked, because I think it's moving away from definitely moving away from the extractive mindset that some institutions might have. I think in most cases, we get into conversations with institutions that want to have participation within this market, but the first conversation is, but how many other accounts are they going to open? And I think for me, what we've then done, I think from a de-risking perspective, is that we found ourselves in a position where, because we're the forerunners in certain programs and certain initiatives, we've then been very, very, very particular about the fact that we will utilize and localize suppliers for whatsoever initiatives that we run. Now, the interesting measurement there is that we shifted the measurement. So from a de-risking perspective, we then acted as surety. So I'll make you an example. Work with an institution, a financial institution that wanted to do work in Mamelodi about 5 years ago. Now, our measurement for finding a service provider to deliver on the most basic thing at that particular time was to ask that immediate community who offers the best service. I think at the time it was, who offers the best meals? Now, you got the responses, the respondents who then came back An overwhelming 75% referred an old lady at the corner, but she doesn't have a COA.
Yeah.
So what we then did is that we then took this information back to this banking institution and said, here's the lady that we'd like to use, but compliance is very critical and key. So what we'll do is that we'll bring in someone who's got a COA, who's highly compliant. She will then prepare these meals at their facilities and deliver them to the venue. If they don't deliver, we'll pay you back from our pockets with no risk to her or you. The beautiful thing from that whole entire story, from this informal, now she's formal, she's still with that banking institution, 5 years on, now she's even tendering. So for me, when I talk about being intentional, being part of, and I think I love the statement that she made, partner with the people that the people trust. But when we're partnering with the people that the people trust, it has to be highly and deeply intentional so that you bring individuals along for the journey. I mean, I think one of the key things that came up was the clearing costs from a pay sharp perspective. But I think for me, when you really deeply think about it, it's not the cost that inhibits the participation. It's the lack of information on the benefit of why I have this in place. So we found that in most cases, when I explain to the individual or the micro enterprise why the benefits of utilizing the service in the long run, it changes their demeanor and their posture in the long run. So I then don't view the banking fees as a cost every month. I view the banking fee costs monthly as an investment to this long-term goal. That shift in mindset, changes the conversation altogether, which is why I then said, it's all about how does it make me money and how does it save me money. So the market in and itself is not the digital market that we all see on an X platforms and the sort. So we are solving for things away from where the market actually is. So the fear that a banking institution or any other institution might have that inhibits them from participating or then channels a different energy when they show up in the markets, they should not have been thinking about that thing, because there's a deepened layer in the market that actually needs the services, but you're not communicating clearly what the benefit is. Communicate that, I guarantee you they'll pay you your money. You don't need to drop the 2.5% transactional fee. The moment the person understands the benefits, number two, the moment you've built a community of complementary support services around their business that have got nothing to do with your institution, it's a win-win for everyone.
100%. And I think that really elevates the conversation and theme around education, that entrepreneurs are responding to it when the message is clear. Lee?
I wanted to add something. There's a couple words that have come up, whether it's Lesego, Ghana, or Bulelani. And one of the key things that came up over and over again is this notion of trust. With a lack of trust, we can't trust them, they can't trust us. There's also a concept that it really triggered me, Bulelani, the word extractive. The history of Africa comes from extractive industries, taking something out. And in the same way, when we think about this very conversation, we can't come across as taking something out. Whether it's a sliver from the 100 Rand or whether it is a fee, people want to get value. So, and Bulelani, you're absolutely right. If we can explain value to people, they'll buy into it. And why it comes down to the metaphor is actually trust, right? If we can solve for trust, we can find a way to meet them where they are. Because what we want to do, Ghana, is we want them to come to us, into our bank. They don't leave their communities, right? So when Lesego said we went into the community, there's this entire psychographic research we've got to do around how people behave and show up. What we think it is actually wrong. When we go there and see how they actually behave, we start to design services and value propositions for them. And finally, this is really provocative. Are there banks in future? Are there telcos in future? Do we care as a community? No. We want access to value. We want access to benefits. And so we are cycling back to the biggest thing of why is inclusion not solved 31 years? Well, it's really difficult. We're going to be different as to how we show up to overcome this challenge. And this group that's disenfranchised, Gugulethu, they aren't at this conversation today. We are trying to give them a voice at this conversation.
Yeah, that's really critical, as you say, meet them where they are. And that also speaks to where communities are so vast and outside of our borders, neighboring countries as well. For many South Africans, for us to get off the FATF grey list, we have seen that there's a heightened level of disclosure just to ensure that if I say I'm sending this to Ghana in a neighboring country, it really actually is him. But this also speaks to the payment network infrastructures that we have, not only for remittances, but money movement between entrepreneurs. Well, Bulelani gave you a nice response, segue, right, to PayShap. But I guess it is fair just for us to raise that question. You know, again, as has been highlighted, understanding not just the cost, but the value of the innovations that are actually brought to market, much like PayShap, that are able to efficiently move money swiftly for many South Africans.
In the seminal work of book Why Nations Fail, there's the concept of extractive institutions versus inclusive institutions. The way in which we've gotten to where we're at right now is built off the back of extraction. And we need to be able to establish institutions that are going to be inclusive and that are going to be able to drive growth. And I would wager that one of those inclusive institutions that we have is the South African Reserve Bank. Vision 2025, which was issued back in 2018, there were 9 objectives, and one of the key 9 objectives is financial inclusion, how to be able to drive financial inclusion. And there's a number of other elements there as well, which talks to competition, competitiveness, which talks to adaptability, which talks to being able to ensure that your payment systems are modernized and your payment systems are able to drive these things. Regional integration, by the way, is also another key objective on those 9 objectives.
And it's really to even out the landscape, right, in the playing field from banked and non-banked financial services institutions to facilitate payments more seamlessly.
Totally. And it's about enabling more participants to be able to have a seat at the table. So Lee mentioned that those of us that are sitting around this table right now today we are not the ones that are on the ground. We're speaking about things that need to happen when the rubber hits the road.
Yeah.
But so one of the things getting back to that whole point of regulation and the importance of regulation and ensuring, to your point about regulatory harmonization and being able to create space at the table. And that's where the South African Reserve Bank have been driving changes in terms of the Banks Act exemption and the authorization framework to be able to allow for more non-bank participants to be able to have a seat at the table and to be able to assist the entrepreneur on the ground and the communities that they serve. When I think about the G20 that we've just completed, we've come off the back of, and the South African theme of solidarity, equality, and sustainability. And that is such an important concept. There's no one institution that is going to solve this themselves. But it comes down to all of us that are in the national payment system that are going to be able to work together. And that's how we built PayShap. PayShap was actually co-created and developed by the industry. So off the back of Vision 2025, the industry then co-created and developed PayShap. And the objective of PayShap was to be able to drive financial inclusion. And the reason for this is to be able to develop something that was going to be able to allow for cash displacement and to be able to bring in more people into the digital system and to digital payments, right?
So that level of camaraderie and partnership.
Exactly. And that was where we all worked and co-created. But obviously, when you go to market, there are different economic factors and competitive factors that come to play. And those are things that, the regulator was never going to, for them, they don't have a pricing mandate. The pricing was left to market to be able to drive. And hence you find that it has normalized. And that's one of the factors that the SARB is taking into account with regards to establishment of the National Payments Utility and the acquisition of 50% stake in paying to be able to drive and utilize faster payments as a mechanism to be able to drive digital adoption.
Got you. That's important for us to know, to actually see that level of partnership that's taking place and the evolution in terms of those frameworks and industry collaborative efforts. There's a lot that has been said here at this table. And perhaps building on the theme that we've come from global leadership meetings like the G20 and the B20, South Africa has been on a good run. We're all very clear about how it is that we're shifting the landscape in South Africa. But I do want us to close off with 2 points that each of you can share. Your industry or organizational commitment to continuing to drive financial inclusion in a country like South Africa and even for our neighboring peers, but also because we are looking at partnership, camaraderie, sometimes we also have to have some uncomfortable conversations with each other. So the commitment that you and your organization are willing to make to drive financial inclusion, to ensure that together we can see the shifts that will take place within the environment.
It's definitely very important for us to anchor ourselves on this point of collaboration, and collaboration just beyond transactional requirements of, how do I lend? We've started to partner beyond the boundaries of South Africa. We had the IFC conference a bit earlier. I think you may have all seen in the news where we've taken a loan to try and at least help to de-risk through DFIs. Yes. It's not enough, but it's a start. I think the way in which we look at risk assessment, I think that loan is about 1.8 billion rand, which has to effectively go into the market. The role we play in Business Bank, I think, is a crucial one for moving SA Inc. forward. And it's a special one for me because I think, it's not every day you are able to be in a role where you can actually make a meaningful change in the way things look. And one of the things that I think as a team we've definitely committed to is we want to make sure that our participation is beyond injecting of loans or whatever, but it's about enabling sustainable organizations. It's about making sure that in the topic of creating employment, it's worthwhile employment. And I think it's about bringing dignity and pride to the individuals whom we have to participate and collaborate with. I think it's about making sure that we bring to the fore the full spectrum of our ecosystem. Yes. To enable for, I think, this inclusion, in a dignified manner, and being part of those societies. And so very quickly, we have to transform the way in which we become part of, moving this economy forward. And hopefully we can sit here in 5 years' time when banks are different. And I can show you when Lee's done with his alpha testing, how I've used, So you're asking about which partner? Lee to get out of the alpha testing and give me alternative data so I can finance more people. So
I got you. Well, we've been around for 125 years, so when you're ready for that job, Ghana, we're ready for you. But just from my side, what comes to my mind, I think, what are we doing? Well, we're in 30-odd countries around the world. One of the things I've learned is we don't always need to be first. Right, we're talking about India and what they've been driving with Aadhaar, which is a digital ID that took them just 2 years, or how they're focusing on the micro segment of MSMEs for the last few years with high determination. What can we do to push the boundaries by learning from other markets, whether it's Colombia or Brazil or the West or the East? There's a lot we can borrow. We don't always need to be first. So what we're trying to do is find this world-leading innovation to bring to the banks, the lenders, the tiers, to start to provoke how things can be different. It doesn't always need to be SA first. I have the benefit, like Ghana does, of working across Africa. I have one client, Ghana, that does 6 million microloans a day. Whoa. A day, right? We don't have the rails as South Africa to be there. We want to be there soon. It'll be linked to the telcos for sure, Shergren. How do we think about that level of disruption? How do we disrupt ourselves to allow us to compete with some of the other sub-Saharan and West Africa countries that are really pushing hard to become the leader in the space? From what do we provoke with each other? Well, the biggest thing for me is the Africa Continental Free Trade Agreement. While this massive disruption is happening, I realize that these 54 countries in Africa, we can be there for each other. We've seen massive growth over the last 18 months, and there's more to be had. We've got to challenge our orthodoxies as businesses. How can we be more to each other? How can others be more to us? But a lot of it starts with having the mindset, Guguletu, that we actually need to do it together. We can't just do this by ourselves, and that mindset's got to start now. So when Ghana says, what can we do? Absolutely. Let's keep provoking each other to be more together. We just can't do this by ourselves. The concept about who a bank is in future, it actually doesn't matter. Who is a bank, who is a telco, who is TransUnion? The customer will decide. When I say we need to go meet them where they are, the winners will be those that show up in a way that communities want to trust. And communities are the ones that drive the economy of Africa.
100%. Lesego, shifting policy?
As a market facilitator, Finmac Trust is a market facilitator, right? And we pride ourselves in saying that because we think that it's important that the market moves with the needs of the people. So needs-driven market facilitation. And that's what we're going to continue to do. And to Lee's point, not only leaning in South Africa, but learning from the other countries that we work in. We work in the SADC region. And there's elements that you're able to extract from other regions to say, these are useful. We could bring them to SA Inc. to improve what we're doing in the country. So from a market facilitation perspective, I think a key thing for us is ensuring that we go into the community, understand the entrepreneurs that Bulalani was speaking about, and understand their needs, and bring it back to Ghana and say, Ghana, you're not doing what they want to do. They're looking for something else, these people, right? They're looking for something else. But also, no, I didn't. And then also going also to Lee, right? And saying, Lee, you need to measure them differently. You can't say to banks that this is how you assess. So banks, yes, have a credit risk assessment that they use. Support them, add other elements so that they're able to understand this person that we're talking about. And I think that for us is where we will continue to participate. So I think it's playing that collaborative role and ensuring that we have people that partner with us that we're able to then facilitate the conversations that are required.
Got you. Key theme of partnership coming up, and of course making sure that we all play our role within this dynamic. As an entrepreneur representing entrepreneurs, what's the one commitment we can hold you accountable to?
Sure, man. I think you can definitely hold me accountable to the fact that we will now go out into more townships. Because I guess it's passion work, right? And then try as much as we can to really partners on board to support these individuals. I think we operate with a singular view. We call ourselves the 1% factor. It's all entrepreneur, it's all grit. I mean, it's their resilience, but we're just the 1% factor that creates a conducive environment for corporates to be able to interact with the township economy in an inclusive economic manner. Because if it's not inclusive and it doesn't have economic spin-offs, then it's another talk shop. So we try and move away from that holistically, because I think the biggest driver has always been impact. And I think for me, I can't emphasize enough, this work can't just be done by one institution. When you sort of think about it, like the past 2 days, we had about 4,000 township entrepreneurs at our Township Economy Summit. When you think about those numbers, you know, they attended the summits, 85 of them exhibited. There was financial transactions that happened there, but what then? The what then is this conversation here? Is this conversation here? Is there potential opportunity to come and potentially do a dipstick measure on some of them that are there? Is there potential opportunity to have Ghana and his team plug in? Is there potential opportunity to unpack what the benefits are of the pay shop? Because I think what we've always wanted to do is create a platform where institutions can come and unpack value, because when the individual walks away with value, the winner is the individual.
Entrepreneurs with a voice at the table. Sugar, let's close it off with you very briefly. What can we hold you accountable to, and what you look to hold your peers to?
So as a systemically important financial market infrastructure, our role is to be able to support financial security and to support the reserve banking, being able to ensure that the national payment system operates efficiently and effectively. As the operator of PayShop and the scheme manager for PayShop, we have a role to be able to drive it and to be able to learn from our counterparts in other jurisdictions. And we are going to be implementing, and now as the National Payments Utility, it is our mandate, our remit to be able to drive digital financial inclusion. A modernized payment system is not a guarantee of economic growth, but you will not get economic growth without a modernized national payment system.
Unlocking that capital, making sure that it not only translates into the investments we need for entrepreneurs, it does create an ecosystem that is vibrant and filled with data for us to be clear about the information and transactions that we're processing, and also innovative solutions that really speak to the full experience and different offerings that can be provided by service providers. While this has been an invigorating conversation, it can go on for hours because there's so many other aspects that we certainly can unpack. But if there's anything that we all need to walk away with from this conversation, is that collaboration is certainly the name of the game. For all of us to drive financial inclusion, not just to ensure that you're able to spend on the items that you desire personally, but really to unlock the economic opportunity through entrepreneurship, facilitating the heightened and increased movement of money, provision of services as well, access to markets. That is essentially what financial inclusion has the opportunity to unlock. And perhaps it's no coincidence that the other side of this desk is empty, because this is where you can also share your thoughts. Collaborate, engage, share your comments, your feedback, and of course, share feedback and suggestions with many of the stakeholders who are here at the table to help us better have an understanding of how best you, as a South African, remain committed to financial inclusion yourself. To all my guests, thank you so much for joining us and having us for this conversation. We've been enthralled by your insights. Sugarin, Bulelani, Lesego, Lee, and Ghana, truly appreciate your time and your efforts. And of course, you can join us next time here on Conversations That Matter, brought to you by TransUnion.